Guys, first day of June 2026, big day for Everything Money Plus. We have a lot of stuff to talk about. Few things. Before I get into the more nitty-gritty details, has anybody noticed Bitcoin has gone against the NASDAQ? And it is down another 2.7% today to 71,457. I want to give a shout out to the guy on Twitter that I always repost when he says you'll never see Bitcoin under $80,000, and it's basically spent its entire time under $80,000 in the last 6 months. We'll get into that shortly because there's a lot of news as to why it is down. IBM shares surge as an old clip of Trump's praise recirculates. I was at a christening yesterday. I was at a first communion celebration yesterday for brother and sister, the christening, and my wife's nephews, two of them were saying, oh, well, I just look whatever Trump's doing because he just makes a killing. And I'm like, so that's what happened here. A clip of Trump's praise recirculates and IBM is up big. A nearly 6-month-old video of Donald Trump praising IBM sent the stock surging as much as 10% on Monday. Let's check it out. Because I think it's really important to understand what we're buying here. Because remember, if you're new to this channel, we don't sit there and buy because somebody says it or because the story is good. We buy because the story is good, but more importantly, the price is undervalued based on that story. Now, you might sit there and think, well, you can't have growth and value. Yes, you can. If you look at our stock analyzer tool, the very first line of our stock analyzer tool is revenue growth. Because if two companies are exactly the same, if they're both selling for $1 billion, but one's going to grow 20% a year and one's going to grow 5% a year, which one is a better value? The one that's going to grow 20% per year. That's just the way it is. Growth is an integral part of value investing. To say that there's value versus growth is asinine. I don't get why people say that. Either way. So, IBM. It is currently a $300 billion company with a lot of debt, $115 billion in debt. How do I know that? Market cap of 303, enterprise value of 415. The difference is essentially their debt. So it's $112 billion. And they did $12 billion in free cash flow. That's still a lot of debt. But it is IBM, so I understand that. Our community members actually have it as a hold. Profit margin, look at this. This is interesting. The last 5 and 10 years, profit was 10 or 11%. Last year was 15.6. Why? It's the whole AI thing. I don't know. Are they getting a lot more sales? Is it permanent? Who knows if that's the case? Let's see what analysts think about this company. Not much growth in profit. From 1250 to 1570 in the next 4 years. I mean, it's okay. Nothing to write home about. Revenue growth, it's okay. Nothing to write home about. So why is the stock up so much? Because Trumpy had the government buy Intel, and Intel's up 1 billion %. What is Intel doing, by the way? Just side note. Let's see what Intel's doing today. Oh, 109. That's interesting. So we're going to go to stock analyzer tool. Let's look at my assumptions the last time I did stock analyzer tool. I think I'm going to adjust a few things here because I don't think the company is very sexy. Revenue growth, 2, 4, and 6% for the next 10 years. Profit margin, 9, 10.5, and 12. Free cash flow is greater. I did 14, 15, and 16. I'm going to change that. I'm going to change that to 15, 17.5, and 20. PE, I did 13, 16, and 19. Not a grower, not a shower. Lower returns on capital. They're fine, nothing great. So I'm not super excited about this company. And my 9%, no margin of safety. What is this company worth return? I'm not going to buy it at this price. The stock's currently 320. I have a low price of 90 to 140, high price of 193 to 320, middle price. So basically I look at this going, I'm interested at a much lower price. How much lower? Well, what's your return requirement? My personal one is 15. It doesn't mean it should be yours. So I'm interested at like 150 or so based on free cash flow. It's got to fall in half. For those of you who don't think that's possible, so many great companies fall way more than that as part of their ongoing. Let's see how they've done in the last 10 years. I think Buffett owned it like around this time. He was buying it like low 100s. I don't know if they still have it though or not. That's the question. Okay. Anthropic has finally filed confidential paperwork to go public ahead of OpenAI. And Anthropic is the one that does Claude. I use Claude for my business. My wife uses ChatGPT for her stuff. I think they're both good. I think they're both great. I think Claude is definitely better for the business side of things. Like I put my QuickBooks reports in there. I ask it business questions. You know what I did today? I actually decided to randomly test out Claude. You know, there's something on our main channel I talk about. When I talk about dollar cost averaging, I said if you dollar cost average into the NASDAQ, QQQ, starting at the peak of the market in 2000 until today, you made about a 14.5 to 15% return. I wanted to see if it came up with that. They said 15%. They did the math right. I was very impressed with that. I was very, very impressed. Like this was kind of like I was scared to write this. I was like, oh, if they don't get this right, I'm going to be a little apprehensive to use them. Nailed it. It said it's about a 14.5 to 15% return. It literally nailed what I mean, and we did, by the way, I did the math like literally manually with a day-to-day chart, day-to-day, all the individual prices every single day of QQQ going back to March 10th of 2000. So I was very happy that and by the way, that took me 25 or 30 minutes. And, you know, Claude did it in a matter of 1 minute. So it's great. So I'm very happy about that. But Anthropic did file to go public. Let's see what they're trying to do here. Said it raised $65 billion in its latest funding round at a valuation of $965 billion. Wow. The AI startup said its annual revenue run rate topped $47 billion at the beginning of May, up from $30 billion in April. So run rate means like if they just repeated that same month to month, 47 billion. So in 1 month, their monthly revenue was up 50% and they did 9 billion last year total. Wow. Claude's great. I do like Claude. I really do. But guys, we're early in the AI race. We don't know what's going to end up being the best AI software that's going to exist 10 years from now might not even exist today. We have no idea. So that's why, for me, investing in these things, first off, the hype is too much. But then after that, it's like, but we're so early in the game. Like, are these really going to be the leaders? You know, that's just kind of hard to really think about. You know, that's my opinion. Anyhow, now, for my favorite topic in the world, for any moron out there who loves Bitcoin, Michael Saylor said he wasn't going to sell Bitcoin. They sold Bitcoin today. Not a lot. 32 coins. That's not a lot. 32 coins is 2.2 million at the time. It was 2.5 million at the time. Now it's 2.2 or so. It's not a lot. But it begs the question. It begs this question. Did Michael Saylor realize that if it came out that he sold Bitcoin, that people would be upset about it and the price would fall? So why do it? I can't imagine a margin call of 2.5 million being a necessity for a company that has billions of dollars in Bitcoin. So I don't know if that was the case, but then it still makes me go like, then why did he do it? Now, the Bitcoin hypesters out there are going to say, well, Saylor's a genius. He's playing chess. We're playing checkers. He's selling it so that Bitcoin falls and he can buy more. Nope. Guys, he has loans to buy Bitcoin. He's already in a loss on his Bitcoin. If it goes further down, he might have calls on his loans, which require him to sell more. This is not Michael Saylor being smart. How do I know that? Go look at his history. He's a conniving sack of shit. He's a liar. He manipulates numbers. He does whatever needs to be done to put him ahead, but not strategically. That's my take on it. But Bitcoin's now at 71,000. So 80,000's right about here.
Can only go up from here, Paul.
That's right. Guys, I bookmarked a lot of Bitcoin comments on Twitter. I saved them, and I'm getting them saved just because people, Michael Saylor last year wrote his prediction for 2026 was like 400,000. The year before that, he wrote the prediction for 2025 was 250,000. He's like, these predictions are absolutely stupid. He's only saying it because there's no reason to know where the price would go. There's no fundamentals of Bitcoin. People say that fiat currency is the same as Bitcoin. Yeah, except that we have the US government and the US economy backing it. Bitcoin does not. It has your pimply 17-year-old neighbors backing it. Like, come on, give me a break here. So anyway, Saylor's a liar. Big surprise there. Lying sack of shit. So there are rumors circulating. Somebody said this to me. Tim told me this today. I don't know if this is true or not. We're going to find out in about 2 seconds. Current target rate is 350 to 375 basis points. End of the year? Oh my God. It's a 50% chance of a rate hike. Okay, we're currently at this level. So they're saying 39% chance of quarter point higher, 10% chance of a half point higher, 1%. Guys, you see how fickle this stuff is? Man, guys, we don't know what's going to happen. I want you to do me a favor. Stop caring about where interest rates are. The more you think it matters, the worse decisions you're going to make about the long run. Yes, I get it. In certain businesses, if you're a developer with a floating interest rate, you have to care about, but even then I would sit there and say, well, then make sure you understand that rates can go up when you're not expecting it. And last year, everybody expected 7 rate cuts. We had 4. This year, people expected rate cuts like crazy. I mean, we've had a few, but now the thought of 50% chance of a rate hike by the end of the year, even when Tim said that, I go, come on. Even I didn't believe that. I'm like, are you serious? It's like, yeah, that's what they're saying. And he was spot on. The CME group has a 50% chance of a rate hike by the end of the rates will be higher by the end of the year. Whether it's a rate hike or a cut and then 2 rate, well, it doesn't matter, but the chance of rates being higher, 50%. Basically, by the way, that means that they showed 0% chance it's lower. They're saying it's either going to be at this rate or higher for the rest of the year. And it makes sense. Why? We had inflation data come out. What did inflation say? Things are expensive still. Things were higher than they thought. And the PPI, which is the producer price index, came in even higher. That ends up getting sucked into consumers. What's interesting to me is, yeah, this is just, guys, do me a favor. Just buy based on fundamentals. Dollar cost average and low cost ETFs blindly. And then if you buy individual companies, buy on fundamentals. Don't worry about where interest rates are. You should not care. Use it to your advantage when people are freaking out about it and selling stocks for it. That is to your advantage. Okay, Berkshire's post-Buffett era starts with a home builder. Greg Abel's first big Berkshire deal looks familiar on purpose. Cash, housing, and a business the company already understands. Taylor Morrison, TMHC. Let's pull up this company. $7 billion market cap. Wait, are they buying this in full? Oh, they're buying the thing in full. So guys, they're not buying the stock. I was going to say, he's already made transactions. He's buying the company in full. He's taking them and putting them in their outfit, is my understanding here. So Tim just said, hey, will they keep the CEO in place? Yeah, they'll keep the CEO. I was like, will they replace the CEO? I'm like, they like keeping people in place and just making sure they're all in the same direction. And look at the stock. It's up 22% today. $7 billion company, $9.85 billion enterprise value. Guys, guess how much cash they have? Berkshire's $397 billion. That means they could buy the entire company, pay off all its debt, and still have $387 billion left over, and this company is debt-free. Yeah, exactly, Tim. That's awesome. A lot of cash flow. If they're paying, I mean, right now it's selling for, after going up 22% today, it's selling for 10 times free cash flow. Good for them.
Does this make a dent in Berkshire's ROI on this business?
So it's a great question. And here's what Tim's asking. The company's worth $1 trillion. Making a $7 billion or $10 billion acquisition, it doesn't put a dent. It's hard. Well, they already own Clayton Homes. They own a lot of other things that kind of like work together with it. So it could still be a good, and at the end of the day, listen, if you can still deploy $10 billion of cash at a 20%, return, still do it. That's not a bad thing, but they're looking for, I assure you, if the market fell tomorrow 50 or 60%, Berkshire would spend probably $300 billion because they still want a lot of cash. That's always been a big thing. Pardon me, a big thing for them. Wow. Incredible. 10 times free cash flow. And this is a housing play. And the housing play is probably a long-term play. Because look, revenue is down. I mean, revenue is down. It's down from 2022, basically flat from 2021. Boy, they've never lost money. Is that accurate? They've never had a losing year in their history being public. Their 5-year average profit is $830 million. This is great. Oh, look at this. It's basically an 8-pillar thriller when you add back in. Yeah, that's pretty awesome. Yeah, good for them. So anyways, guys, that is Everything Money Plus today. Please make sure you follow us if you don't follow us, because we do 4 or 5 videos a week. We cover earnings releases. We cover the news on a day-to-day basis. So I appreciate your time very much. Thank you.